Hello, everyone out there in podcast land. Welcome back to Adventure Capital, where we not only discuss the entrepreneurial journeys and adventures with founders who have raised capital on WeFunder, but also the different resource providers and mentors helping founders along the way. Huzzah! Today we have Kimberly Lewis of Curlmix, a beauty brand owned by the people. Let's get these curls and this business popping. Before we get on with the podcast, we're required to let everyone know that anything we say here should not be interpreted as investment advice, recommendations, or soliciting investments in any company. All companies raising on WeFunder are given an equal opportunity to participate in the podcast based on the progress of their campaign. WeFunder gang, take it away.
Kim, welcome to the podcast. We're so stoked to have you.
Thank you for having me, Katie. I'm excited to be here. Hey, Jonny.
Hello.
To kind of set the scene, so Kim is the founder of Curlmix. They've launched one of the most record-setting campaigns on WeFunder. It's been a total honor to work with you over the last couple months. Currently, right now, as of 10:03 a.m., you have $5.4 million in commitments from 9,369 investors, which is totally insane, super impressive, and we're excited to get all of your wisdom on this podcast.
I couldn't have done it without you guys' help, so thank you.
Yeah. So first, tell us about yourself and how you came to start Curlmix.
So I'm Kim, CEO and co-founder of Curlmix. Curlmix is a clean beauty brand. We focus on simple beauty rituals for our customers. Our number one ritual is our wash and go kit. It helps people get a wash and go hairstyle like the one I'm wearing. And we started Curlmix back in 2015. We started as a DIY box. So think like Blue Apron, but for hair. And then we did that for about 2 years and found that our customers absolutely loved our flaxseed gel. And that was like an organic gel that you really couldn't get in stores because manufacturers wouldn't make it. So we were one of the first companies to actually produce it, put it in a bottle, and then, offer it to our customers.
So why wouldn't manufacturers make it? How did you kind of figure out there was that hole in the market, and how come you guys could do it when manufacturers previously hadn't been able to?
No, yeah, for sure. So we went to 3 manufacturers, and they basically were saying that if you want to make a flaxseed gel, we can make a typical gel that's like, the gels that you scoop out of a big bucket or whatever, they kind of stay in place. Mm-hmm. We can make you one of those gels and put flaxseed oil in it. But that's very different than flaxseed gel. If you guys ever eaten flax seeds before, you can put them in a smoothie, or it can be an egg substitute. Well, if you boil them, they make a really gooey gel. And when you extract the seeds from it, it's the perfect hair gel because it's not too hard, but it also still gives you definition, and it's organic, right? Manufacturers are like, we're not doing that. They're like, you need to give us some oils. We'll put some oils, powders, butters together and make a product. Well, this is too labor intensive. So it's too laborious. So it's too labor intensive. So they wouldn't do it. And so my advisor was just like, Kim, you just figure it out. And I spent, I was 7 months pregnant. I spent all of September that month in my kitchen making 50 different batches of flaxseed gel. And then we did a pre-launch to our audience. And at this point, this is like my second business. I've launched maybe 5 different products 5 different times. I had a lot of failure up until this point, in my opinion, over the past 2 or 3 years as an entrepreneur. But when we launched the flaxseed gel, something that was really unique in the market, something that was only we could do, and we had an audience who was already interested in it, we sold hundreds in a matter of hours. And I was like, oh, this is it. I was like, we should stop doing everything else and we should just do this. And that was the moment we decided to pivot. December was the last month we did DIY boxes, and we had 6 months of content planned. We had we had photo shoots, formulas that we'd already made. We had videos that we'd already taken and edited, and we literally threw it all out the window. And was like, our customers want the flaxseed gel, so that is what we're producing. In January that year, we did about $3,000 in sales that month, and I cried because that was like our lowest month. It was like we had started all over from 2 years ago. And I was just like, oh my gosh, this is a terrible idea. And so it was like, no, Kim, you knew switching from subscription boxes to the traditional e-commerce would be difficult. Like, it's only been a month, give it another. The next month we did about 8,000 in sales. And I was like, oh man, like if we get to 16,000 next month, we'll be back to where we were before we like pivoted. And we ended up doing 30,000 in revenue with no ad spend. And this is just micro influencer marketing and stuff. And I was like, oh my gosh, like, Tim, quit your job, come work for Curlmix. And he was like, I'll give you 3 months. If you can't pay our mortgage in 3 months, I'm going back to work.
And so back up, because Tim is your husband.
My co-founder. Tim is my husband. He's my co-founder. He's been my biggest cheerleader since we were 16 when we met. Wow.
So, but at the time, he was doing another job, but then the growth in sales that came from the pivot to focus on Flexi Gel is what kind of enabled you to, I don't know who snared who in the romantic side of the relationship, but it sounds like from the co-founder side of the relationship, you kind of enticed him over to join Curlmix full time. From what was he doing previously?
So he was working in tech. Think of like those Oracle's, NetSuite's, like he was an administrator for those kind of platforms. And so he was making almost, 200,000 annually. He's getting a lot of money, and he literally quit and came to work for Curlmix. And that year, we probably made 60,000 that we shared. So like he left a lot of money on the table to come help me build Curlmix.
And what year was that when you kind of pivoted to the Flexi Gel? You kind of Tim joined full time. What year was that?
This was 2018.
Okay.
2018. Wow. But prior to this, Tim's background is actually not tech. So Tim went to college with me for he majored in economics and psychology. So he wanted to go into behavioral economics, and he was going to be a researcher. To this day, like he loves reading, and he wishes someone would pay him to do that for a living.
So how do you guys like complement each other? What are the various like, strengths that you bring to, kind of running Curlmix?
So we literally just joked about this morning. We said we're going to get t-shirts that says strategy and execution. Like he's strategy and I'm execution. On his own, Tim would not be an entrepreneur. He'd be like, this is too much. I'm not doing all of this. This is no. But me, I'm like, I'll be the entrepreneur. I'll try everything. But sometimes I don't spend enough time thinking about the thing that I'm going to do before I do it. I just kind of like jump headfirst into it. So that can be really stressful for everyone else who comes along with me, right? But I dive in headfirst. And so we've been trying to figure out a problem that we've been working on, which is Facebook's iOS update issue where, people's, ads are performing as well. So I'm like, man, Tim, like we just got a first tranche of like the investment from the crowd fund. We're like, I got to show growth stat, like, and I want to fix these ads. And so he's like, Kim, you need to do a guerrilla marketing ad and, make sure you have the attention getter in the first 3 seconds of the video. Make sure you're hitting all the main points of influence, from Robert Cialdini's book, Influence. And, make it a minute, throw it up, and like, let's put some action behind it. And so I was like, you're right. I don't know why we don't have one of those ads going. So that was a great idea, right? But if I hadn't done anything with it, if it just stopped right there, it was just an idea. So literally yesterday, I took about 30 minutes in the office. I recorded a really good video that I thought would convert really, really well. Threw some ad spend up there behind it, and it's already performing very, very well, far and above all the other ads that we have. And so it's like that kind of shows you our strengths, right? Strategy and execution. I'm executing all day.
I mean, me and Kapow could both get t-shirts with strategy and execution. Unfortunately, she would probably wear both the strategy t-shirt and the execution t-shirt. But so we kind of complement each other, but Kapow has both sides of the.
I do love Jonny has a t-shirt that says pop that he wears pretty often. And it would be funny to have me wear strategy and execution and then pop.
Yeah. Kapow has strategy and execution and I'm a dad. That's basically the division.
Oh my God. You're charming, Jonny.
Strategy and execution.
Jonny, you're charming. You're lure people into the door and Katie makes it happen. So you have
Kapow's strategy and execution. I'm just charming. Yeah.
Yes.
Oh my gosh. Kim, one question before we totally move on from this is when you were growing month over month with the Flax Gel as soon as you pivoted, were you still making that by hand or when did you shift to a manufacturer?
Yes, we were still making it by hand. We were
God.
doing it in stock pots. So we could only make 60 in a bottle. And at the time, the best, you have 4 eyes on a stove. So you got 4 stock pots going. And they cook at different temperatures because you have a little eye and a big eye and all that. It was a mess. And we had gotten, at this point, $25,000 from Backstage Capital, Arlen. She's my shero. which is the first check I ever got as an investment for anything. And that was
She's
enough
awesome.
for me. Sorry, go ahead, Jonny.
I was just saying she's awesome.
Yes, I love her very much. She basically gave us the money to that 25,000, and we spent 5,000 on a machine on eBay that helped us make 600 in a batch instead of 60. So that was like phenomenal. And then we used some of that money for our first and last month's rent in a new space. So we finally got like a 1,000 square foot unit in a manufacturing incubator. They have M-Hub here in Chicago, and I think like ICNC, and essentially you can just, it's like an incubator, but for manufacturers. So you need certain kinds of hookups, like voltage hookups, etc. And so it was really helpful. So right around that time is when that happened.
Gotcha. Okay. And then where in the journey does Who Wants to Be a Millionaire come in? For those who do not know, Kim's husband and co-founder, Tim, did he win it or he was just on the show?
So he won $100,000 on
Oh
Who
my
Wants to Be a Millionaire. We have everything that you can think of to get money. We have not everything, okay, but a lot of things, right?
That's
Game
a first.
shows.
That's a first.
Oh,
the
sorry.
game show approach. Will you talk us through that story? And most importantly, I want to know, like, were you there? Or were you screaming at him like, "It's B, Tim, like, go for B"?
They would put you out. But no, so this was the summer after college. I was working a job that I did not enjoy. I felt marginalized at work every day. Just it was really awful for me. But me and Tim spent the summer like hanging out, and one day we were watching Who Wants to Be a Millionaire for like 3 hours, and Tim got every question right. And I was like, I have never sat with anyone who gets every single question right. You know, he's a trivia buff. He was the captain of academic Carolina High School. He can pretty much, from a multiple choice, he can kill it. He had like the perfect score in reading on the ACT, a 36 out of 36. Who, you know what I mean? Like who gets that? So anyway, I was like, you need to be on this show. So one day he came home from work and I had bought his plane ticket. I had signed him up for the show and I had booked his hotel. And I was like, you're going. And he was like, this is dumb, Kim. This is a lottery. I was like, I don't care. I was like, you need to be on this show.
The
So
executioner.
Yes, Katie. And so he goes, and out of, every day they take new applicants, right? So you just come to the place, and he had taken a test. It's about like 30 questions and you get like 10 minutes, I think, to do it. And he was in the top 3 scores out of 200 people. And so then they took him like off backstage for on camera like testing to see how you play on camera. And then literally 2 weeks later, we were pitching our first business, which is a social network for natural hair. Niche social networks don't work, but we learned a lesson really early on. And we just got word that we lost that competition, and they called us and said, hey, we want you to be on Who Wants to Be a Millionaire. Can you be here in 2 weeks? And so we literally at the time, like, didn't have enough money for all of our family to fly. And so we all drove. So like me, his mom, his dad, my mom, his aunt, uncle, like all 7 of us drove to Who Wants to Be a Millionaire overnight to New York. And then literally afterwards drove right back so I could be at my job the next day. But it was intense and it was cool. And he ended up winning about 100,000. It's about 80 after taxes. So it was like a salary, but it was a really cool way to like get some startup capital. And he invested 15 to 20K into our first business, which, ultimately I didn't succeed, but I had made a lot of connections and I learned a lot. So I learned how to do videography and photography and build websites. And I met some of my today coaches back in 2013 when we did that. So it was definitely something to help us like get to the next level.
And that was the first of 2 major TV appearances for the Lewis family. So
Yes.
Talk us through the Shark Tank appearance.
So the business had started to take off. Tim had quit to come. So back to when we did 30K that first month, Tim came to work for the business. And I want to say maybe 2 months later, my aunt told us that the Shark Tank was auditioning or having a casting call at a local college in Chicago. So at the time, we found out super late, and we had our son at that point. He was like maybe 6 months. And we were just like, well, we're just going to go, and we're just going to bring him with us. And like, he cried during our pitch to the judges or whatever. And I was like, oh crap, like we're never going to make it on the show now. And they ended up selecting us, even though I'm like, oh, surely we didn't get it. But they liked the fact that we were Kim and Tim, like the love story angle kind of. And so we ended up working with them over the next 4 to 5 months. before going on the show. There's a lot of work to do before you go on the show. It's really like a part-time job. It's not like you just show up and you pitch. You probably rewrite your pitch maybe 7 or 8 times. And then you're still running your business while you're preparing for Shark Tank. So you have to make sure you're still showing growth, even though you still have to manage this TV appearance and fundraise in the background. It's just a lot that goes on. So you're really, anyone who goes on Shark Tank, it's probably super stressed because there's so much they're doing in the background. But we get on the show and we ask, our offer was, 10% for $400,000 into the company. At the time, we were on track to do $1 million that year. And Robert Herjavec said that was too high. And so he basically said he would do $400,000 for 20%, which sounds like, that was a good deal for a shark. But considering that we had already
$1 million of revenue for a growing company on a $2 million valuation, it's okay. So
it's a shark deal.
You turned him down.
Yes, so we turned him down. And it didn't air until maybe March the next year. So we'd made $1 million before the show aired. And then the show aired and it was like, bananas. It was anyone who goes on Shark Tank, it's the traffic you get is insane. The number of orders you get is insane. Yeah, it's a whole other like level of trial and error. But it was good though. I don't regret the experience. We get reruns all the time. I loved it. I
watched the episode. I thought you came across like incredibly well. You were one of the most impressive, I think, like founders that I've seen on the show. Were you disappointed when they didn't invest? Like, what was the emotions when they kind of passed on the 10% for 400K?
I realized that what I offered was the same thing that Jamie, who was the founder of Ring, he offered a very similar deal to the Sharks, and they laughed him off the show. They're like, you're ridiculous. You're not worth that much. And he basically came in with a $6-7 million valuation and was already making like $1 million annually, So I'm like, that's a pretty normal valuation.
Yeah.
And he sells, to Amazon for $1 billion years later. So I was like, I was comfortable with what I was offering. But I was worried that my show wouldn't air. Because some people will take deals just to take them. And then they, 70% of the deals don't go through later.
Right.
And I wanted to be true to whatever it was that I was saying I was going to do on TV. I didn't want to game the system, if you will.
Right.
And so, I was a little, I didn't feel bad after the day. I remember doing the reaction and they're like, so are you crushed that you didn't get a deal? And I was just like, no, like I offered what I was comfortable with. It wasn't acceptable for what the Sharks wanted. I'm happy with how everything turned out. I wasn't sure if it was going to air or not because you don't know that until your season happens and you find out a couple weeks before that it's actually going to air. So I was nervous that it wouldn't air, but I didn't regret it in the moment at all.
Wow. Yeah, that's awesome. And just kind of like a testament, I think, to you as a person for just like standing your ground. Had you raised capital prior to then, or were you in a pretty good situation with the business at the time of Shark Tank?
When we first filmed Shark Tank, so we filmed in September, but it didn't air till March the next year. When we filmed Shark Tank, over that period, I had accumulated some personal debt just to get the business off the ground. And then just before, when we found out it was going to air, that's when I started seriously fundraising. I was meeting with people and had gotten offers for $6 or $7 million in valuation after we filmed, but before it aired. And I felt like that was still low because those people were just going to give me money. They weren't going to help grow the business. And, but I was still like talking to people, but not doing like a lot of like, okay, I'm taking 60 meetings and getting yes or no's from investors. I wasn't doing that. When I found out it was going to air, that's when I started calling every and anybody, because if you're going to do potentially $1 million next month, but you were doing 200 or 150,000 the month prior, you do not have the funding for the inventory that you need to be able to accommodate all those new customers. And it's an opportunity cost if you don't, right? Because
it's interesting though, right? Because like, when your revenue is at the lower baseline, then the valuation you're going to be able to command is also going to be lower. So you almost want to wait, because if you're fundraising in 3 months' time when the Shark Tank revenue hit comes in, then you're going to be able to command a high valuation. But on the other hand, you need the money for the inventory. So it's kind of this tough decision.
So we ended up doing a convertible note on a safe. And we did it for about $200,000. And that's how we got Jeff Weiner, the former CEO of LinkedIn, to be our investor. So basically, there's a guy that he does deals with in Chicago. He's invested in maybe like 60 companies. And Arlen put me in touch with him. And she put me in touch with him. It was like a 10-minute meeting over the phone. I think he was in like Kenya at the time, but he was traveling with his family. He's like, I'll be back later. And he was just like, so what's your CAC? What's your LTV? What's your run rate? Like literally just all the metrics. And I think whether or not I knew them was going to be the reason, whether or not he did the deal. He's like, okay, I've got $100,000, and can my partner Jeff Weiner come in? I was like, who was that? And I looked at him, I'm like, oh, he's the CEO of LinkedIn. I was like, sure.
Okay. I mean, okay, if you twist my arm, yeah, I'll have Jeff Weiner on the cap table, sure.
Would you believe I didn't say yes right away? So I definitely did some due diligence. I called people like, should I take this deal? He's like, if you don't take that deal, I'll take that deal. I'm like, some friends I was asking, they were being funny. But then after the show aired, Jeff was watching Shark Tank with his wife, and he's like, honey, I think we invested in that company.
That's awesome.
He forgot. And I thought it was so funny. Jeff's an awesome guy though, but it was hilarious to me. And so then he called me up and said, hey, Kim, can we invest $1 million in your company? The Sharks were nuts for not offering you a better deal. And I think, if we continue to invest in, straight white males, that's all the world is not going to look like that. And so I want to make sure that we're investing in people who are, serving the world, but also don't look like me. And so that was his thesis. And I was like, that really like touched my heart. So I took their money. We raised $1.2 million in a price round at a $12 million valuation for our seed investment. And yeah, that was the money I had accepted. And so after they came in for $1 million, we ended up raising maybe 200,000, close, like everyone wants to come in, right? Like, can I get in this round, after they leave the round. So that was the first like big amount of capital we raised.
And so you raised, from heavy hitters and accredited investors previously, earlier this year, what kind of drove your decision to, run your next round from your customers and community and the crowd?
So I don't know if you guys know this, but typically in my community, when someone grows their company really big, or in the African American community, when someone grows their company really, really big, and if it was particularly a beauty company, right? But they sell, the community is like, hey, like we didn't get anything. Like we helped you build this beautiful brand, it's massive, and you essentially sold out to a big conglomerate and we didn't get anything for that. And so it's this narrative of like you sold out. And I understand it, right? Because I've been the customer before, I've been on the receiving end of that. And so I've always been thinking of like, how can I get my customers involved? How can I share that value with them? And when crowdfunding only allows you to do $1 million before, I was like, crowdfunding is a lot of work. I was like, I can't do this for only $1 million. And then the number changed to 5 million with the adjustment of the law this year. And it made me reconsider. And I was like, man, like maybe we can crowdfund. We can allow our customers to own shares, because literally every time they make a purchase, it increases the revenue, which increases the value of the company. So they get to benefit on both ends, right? Get a great product they love, but also grow some, wealth for them as well. I can't guarantee results, of course, but that's my hope and my intention, with their investment. And
so just on that kind of like not being able to guarantee results, I'm kind of curious about this because, love that intent, right? And from the first conversation we had and then looking at the campaign page, right? It's like, we want you to be able to build wealth with the growth and success of Curlmix. But does that also then kind of put some pressure on you? Because it's like now it's like your customers, your community who are investing their money, them for a start. I mean, I guess Jeff Weiner by now as well and Arlen, but like, you kind of know your community and customers almost better. You have a closer relationship with them even before they invested, but then also they don't maybe have as much money to throw around as the CEO of LinkedIn. So how do you like, does that kind of add pressure? And how did you kind of come to the decision, maybe, despite that additional pressure?
I've been running my company in a way that's focusing on growth, not necessarily one that's about pure profit. Because if it was about pure profit, we'd stay small and we wouldn't be able to serve as many people. So with that in mind, I needed some form of capital, right? And I think my customers would have I think my customers would have rather they get to be the ones to own the shares of the equity, you know, or own the shares in the business or the equity than some random person, some random white guy in New Zealand. I mean, I don't know. You know what I'm saying? Like, I think that is, and so, yes, that, I don't know. Did that answer the question? Can you repeat that question one more time? Make sure I answered it properly.
Yeah, it was just like, I guess, along with the kind of upside of enabling your customers to build wealth with you, you know, if Curlmix like succeeds and has a big exit, I guess there's also the additional pressure that, like, you know, if things don't work out, startups are risky. You know, a lot of businesses like don't work out.
And,
yeah.
and to your point, Jonny, you're right. Like, it is risky, and you know, sometimes they don't work out. But because we have like a decent bit, like a solid business, we make real money, we have real customers, we have real value. Even if we didn't like IPO one day, which is what I want, we'll at the very least get a return. I think we have a very comfortable business where we can at least sell for whatever our valuation is. So it's not like people are going to lose their money, or I feel more comfortable that they're not going to lose their money, right?
And also, it's their choice at the end of the day, right?
Yeah, for sure. Of course, they can always, you know, not invest. But I felt comfortable that I could get them a positive outcome. And that's what made me consider crowdfunding. Now, if I didn't think that I could either sell the company for 30 million or more, or potentially IPO one day, you know, then I would have been like, crowdfunding, you know, this is, I don't want 5,000 people to be like, she just took our money and ran. You know, I want to be able to give them some real value. So ultimately, I felt like I could deliver on my promise. Or, you know, deliver on what I think that I can do. And then I also felt like it's best for them to own it than any, you know, random person, right?
Love it.
And then I still want it to exist, you know? So if you're focusing on growth and you don't continue, you know, raise money to invest back into the company will no longer exist. And I don't think my customers will want that either, right? They want their hair to look poppin'. So there goes crowdfunding, you know?
Love it.
Yeah, so my question was from Kim, the executioner. Can you tell us your top 3 pieces of advice of how you actually ran the crowdfunding campaign to your network specifically?
Oh, okay. So not necessarily, not like regrets or like tips or anything like that. Okay, I'll give you tips for just promotion. So if you decided you're crowdfunding, right? And now it's just a matter of, okay, how do I get in the mode of like making it, how do I raise this money? The first thing I did was build a go-to-market. So I don't know if you guys ever done a go-to-market for a marketing campaign in your business, but like for me, if we're doing a product launch, I say, for example, 4C only. In the go-to-market, we had a description of every product. We had the pricing for every product. We had when we were gonna reach out to influencers, how many we needed. We had a list of how many emails we were gonna send to launch. We had a list of, you know, all the things and who was doing it, who was responsible for it for the entirety of the launch. So from maybe a launch was 3 months long, and it had literally every single detail of what needed to happen in that go-to-market, right? So that was the one. The second thing I needed to figure out was how many actions did I need to make each amount of money. So for example, I wanted to raise the 5 million. I thought, okay, how many, I can get 3,000 investors to invest $250. I can get, you know, 2,000 investors to invest 500, and I can get 1,000 to invest 1,000. And then so I like did that, and I was like, okay, how do I come up to 5 million? And then I thought, okay, what actions can get me 3,000 investors at $250? Oh, that's gonna be my email campaigns, you know, on Klaviyo or something like that. I'm like, okay, what actions will get me to the $500? I was like, those are probably gonna be my top customers, people who love Curlmix, you know, so maybe segment out my top 20% of customers. Then it was like, well, how am I going to get people who have $1,000 to invest? I'm like, those are probably going to be friends of my investors. So maybe I need Arlen to retweet something, or, you know, maybe I can, and then and maybe Jeff to retweet something. And I was like, I don't know if I can really count on that, because that's like you know, sometimes if you get a celebrity to repost something or do something, it doesn't actually materialize into something. So I had to make one really good piece of content that I thought would resonate with someone who would invest 250 and someone who would invest 2,000, right? And that was our Shark Tank clip. But not just the clip itself, but I don't know if you guys ever seen how some news sites do their headlines, where they'll do Black couple raises, you know, turns down $400,000 deal from Shark Tank, and they'll put it like in black text, and that's above the video. And then on Instagram, me and Tim wrote up a campaign storyline that we wanted to kind of be reiterate it through our landing page, through our podcast interviews, through our emails. And then we basically put 2 or 3 sentences on a carousel post on Instagram. So it would be 10 slides, but the first slide would be that Shark Tank post with the headline. And then it would have the story campaign over the next 5 slides. And then there would be a video at the end of the business that's actually on the campaign page itself. And we took that piece of content and then shared that with all of our investors to kind of kick off each of those actions to get us that kind of money. And so then it was like, okay, what do I need to be doing each day to implement these actions? So the first day we kicked it off with an Instagram post at 6 a.m. The week prior though, we had posted in our Facebook group with our customers saying, hey, like you guys get first dibs. Then we did the Instagram post and then the email and the blog post and then the WeFunder update, et cetera. And so I had maybe like 10 levers to pull every day if I wanted, but I didn't do all 10 actions or all 10 levers every single day. I did all 10 in the beginning, and then I started doing 1 action a day for the duration of the campaign. And then maybe once a week, I would do like 5 of those actions at one time to create like a big wave. So first thing was to go to market, everything that I was doing. Second thing was figuring out, well, we might switch it up. Which actions get me to those number of investments, then the go to market. And then the third thing was having one really good having a good storyline. And then the fourth thing was having one really good piece of content to kick it off. Something that you know has been successful for your company. It could be a feature in Inc. magazine if you've had it. It could be the fact that you've raised money prior. Founder, or what are you the only at, right? Female founder, raises $1 million in less than 30 seconds. I don't know, like whatever your thing is, or maybe a really unique product, whatever that newsworthy campaign is, and get that at the front. So those would be my tips.
And you mentioned like lessons, like, if you were to do this again, or for a founder that hasn't run a Reg CF campaign before, maybe in a similar position to you, what are some lessons you've learned, things you do differently?
Oh my gosh, by not investing financially in my financial team for the past several years, I ended up paying all of that at once, having to go through an audit, and then also having to go back and forth with lawyers and fix paperwork. It just, I don't know, I've probably spent anywhere from like all in 50 to 100,000 cleaning up my books and paying attorney fees. And it was just because I was so
you need to pay that before you can get any money, because if you're raising more than 1.07 million on WeFunder, you need an audit, and that you need to get that audit before you get money. So then you have the cash flow kind of impact. And so
because I had to pay the auditors who did the audit, and then I had to pay another accounting team to help clean up my books, right? So I'm paying 30K here, 30K here. And then there's attorney fees, and I have my general counsel attorney, but then I'm also working with an SEC attorney because they know the SEC law that my attorney may not know. And I'm like, oh my gosh, but my attorney, my general counsel knows all of my documentation and what I do and don't have. So they have to talk to each other. So anytime you have attorneys talking to each other, accountants talking to each other, and accountants talking to attorneys, you're going to rack up a bill.
You're in hell right now. The depths of hell is what you're describing there.
Oh my gosh. But I also feel like crowdfunding has made me, like, if I didn't have the confidence that I needed before, crowdfunding has made me brilliant. If I wasn't already smart, crowdfunding has made me really smart, because I have learned so much very quickly in a very short period of time, and understand the importance of certain formation documents, or things that I would have probably never like picked up a book to read, because I'm like, I need to focus on making money, not like this like bureaucratic stuff, and now I understand the value of that. But I also think I have a glimpse of what it might be like to go public, which maybe eases my concerns about potentially IPOing one day, because we kind of already did it with a crowdfund, so
I think like what you're highlighting there, like the audit requirement. So if you're raising 250K to 1.07 million, you need a CPA to review your financials. Because you're raising more than 1.07 million, that CPA needs to audit your financials, and that requirement, both the time and effort and cost to get those audited financials, but also, some founders are more or less comfortable with that information being out in the public domain. That for me is like the biggest downside of running a regulation crowdfunding campaign as opposed to raising a regulation D from accredited investors, institutional investors. And it's something that, yeah, some founders, get hung up on, or it's a barrier that they aren't willing to overcome. But for me, that's the one biggest kind of con for me of running away from the plan.
I have some anxiety around other people seeing my financials, but I mean, honestly, I don't really care about that part, which is because I'm very transparent, as you probably can tell. I've been talking money and all that on this call. But what made the audit difficult for me is not that we were doing anything financially crazy or illegal or fraud. That wasn't it. It was the fact that we manufacture. So we manufacture our own products, hair care products, and we needed to know exactly how much the cost of water in every single bottle that we've sold for the last 2 years.
And inventory management is just a pain in the ass that a SaaS founder doesn't have to worry about.
Exactly. So if you have a tech startup, this is not going to be your problem. But because we have e-commerce, we have 2 e-commerce companies, and then we also product, different brands, and then we also do the manufacturing. So we do 40,000 units at least a month over the last 2 years. So it was a matter of going back and then we launched 3 new products every month. So we had NetSuite, but we hadn't fully implemented it yet. So, and NetSuite is like a $40,000 software annually. So it's very expensive for a startup founder to go and buy. So we had to manually calculate a lot of that stuff. And then the auditors, of course, went back and checked it to make sure we were pulling it from the proper invoices and things like that. So the good news is it's accurate and it's right. The bad news is it took 3 months, and that was I wasn't expecting to have to do 3 months of accounting when we decided to crowdfund. So that was my biggest lesson in all of this.
Yeah, thanks for sharing that. I guess looking forward, what's on the horizon for Curlmix? What's next?
Now it is time to go fast, to make good on my promises and my, what I've been telling everyone we want to do. So we want to be like the Black-owned Procter & Gamble, right? We want to be traded on the stock market. Procter & Gamble started as a soap and candles company in the late 1800s and by 2 brother-in-laws. And, when electricity came out, they stopped selling candles and pivoted to something else. And over time, they've added brands. And then they went public in 1970, and their stock went through the roof during the pandemic because they owned Charmin, right? So the tissue was everyone was buying that during the pandemic. They own Old Spice, Always Maxi Pads, Tide detergent. I mean, literally, I could go on and on about the number of brands that they own. And so right now, Curlmix, Listener Brands technically owns Curlmix and 4C only. And I want to be able to add more to our portfolio and try to get each of those brands to 20 million in revenue. So what I'm focused on now is going bit by bit, right? So next year, I'm hoping to make at least 12 million in revenue. And
what's cool, right, is that there's a couple of synergies, right? I used to be in management consulting, so I have to use words like synergies every now and then just to, throwback. But firstly, you've done it before, right? You've built a brand before. So that's presumably a law of diminishing returns where okay, it's easier to launch the second brand. It's easier to launch the third brand because you know the playbook and what works and what doesn't work. And then secondly, there's kind of synergies from you have an audience, right? And the same customers that buy flaxseed gel might buy, different products as well. And so probably the CAC, there's kind of synergies from a marketing and audience perspective as well. So hopefully, it kind of maybe gets easier to launch additional brands over time.
It definitely does. It took us maybe 2 years or so, 2 to 3 years to get Curlmix to $1 million. And we just launched our second brand, and that brand will do $1 million in its first year. So, nice. It'll get faster and better the more we do it. So maybe our next brand in its first year might do 2 or 3 million, we never know. So I agree.
Yeah.
I heard your calendar ding. So to wrap it up, bring it home. Thank you so much for being with us on this podcast. This is a question that we ask everybody, which is, what is one piece of advice you would give to a founder who's just starting their business?
Oh, just starting. My biggest advice for a founder who has just started their company is to be open to feedback. Sometimes founders who are just starting will come with they're like, I want to talk to someone to get feedback on my business, right? But then you give them feedback and then they get extremely defensive and tell you oh, but it's this and no, that this, and and I've been there, so I get it. But if you meet somebody who can offer you wisdom and offer you advice, listen with a really open ear and say, you know what, you're right, and take that advice and then go fix whatever you need to fix.
Okay, just to push back on that, sometimes you'll get advice that's bad advice, right? And you can't do everything. So how do you know when to take that advice and when to be like, okay, obviously you should be open, hear the feedback, but how do you know when to say, no, actually that's not what we should be doing?
Honestly, in the beginning, you don't know what's good or bad because you haven't tried it. And so if you're really early, and I'm talking early, like no revenue early, you know, you just need to try it first before you can say that it's bad. It's only, to me, advice only becomes bad when you have experience. And you know that it's bad advice. So you don't got much to lose if you just started.
Very cool. Well, Kim, this has been a really fun conversation. And it's been amazing working with you over the last few months. And yeah, we're stoked to have Curlmix on WeFunder and look forward to really successful close of the campaign over the coming weeks here. And yeah, look forward to seeing the inexorable rise of Curlmix over the years here. Thanks so much.
Thank you guys. I've had a blast working with you. You guys are awesome. Couldn't have done it without you. You've taught me so much. And Katie, especially, you're brilliant. Johnny, you're brilliant too, but you're right. Katie is like really brilliant. And I'm so grateful to have worked with you guys over this process. I wouldn't have started crowdfunding had Johnny not convinced me. When I emailed Johnny, he was like, I'm on 65% of the way there, but I'm still not sure. He's like, maybe I can get you to 70% of the way sure. And after talking to Johnny, I was like, okay, we should definitely do it. And then Katie kind of like walked me through the process. And Katie, you've been phenomenal to work with. So thank you so much.
Thank you. I so look up to you. Cannot wait to see Curlmix's world domination. So yeah, thank you. We'll let you get going. Really appreciate your time on the podcast.
See you guys. Thank you for having me.
Bye. Thank you.
Bye.
Thank you for tuning in to another episode of Adventure Capital. I hope you laughed, took notes, shed a tear, and most importantly, feel ready to go off on your own adventure. And remember, whenever you are ready, WeFunder is here to help.